Hey, everybody. Welcome to Thursday's version of the CARES Act Q&A with Adam Boatsman. So, Adam, I'm going to go ahead and turn this over to you. We've gotten some questions already in, so everyone who is on the line, thanks for joining us. We appreciate you. There is a Q&A button at the bottom of your screen, so feel free to hit that. We'll go with the emails that we've already gotten this morning. So here's one. If I have a co-founder who is a foreign national living in Stockholm, Sweden, and owns 20% or greater share of the equity in the company, am I eligible for PPP?
Oh, so that was all about what if you've got a stockholder that's greater than 20% owner. Some of that so the first thing you're going to have to test is to make sure that you don't have any affiliation rule problems, meaning if that person also owns an affiliated company or has some type of control over yours, whether or not that would exceed the you would exceed the 500 employee count. So independent of that, remember that with that foreign stockholder, if it's an S corporation or a partnership or some other type of flow-through entity, as long as they're paying U.S. taxes, they should have an identifying number, which one of the requirements would be that they have to pay U.S. taxes. So I would have put down that identifying number on my application form for the certification process, because only one of you guys needs to sign it. If it's a C corporation, I probably would still try to give it a shot to do it. And there is a procedure on the affiliation rules that if somebody irrevocably gives up voting rights to make major decisions for the company, then you can suddenly become eligible for CARES. So I would give it a shot. I mean, ultimately, it's going to be up to your banker to decide on whether or not to give you the loan or not. I mean, the only two things that they've really specified is, first off, it's got to be payroll for people that are in the U.S. And then the second is on the certification for the 20%, it asks for a taxpayer identification number, which is either going to be your Social Security number, a taxpayer identification number if you're not a U.S. citizen, or an EIN if it was a company. So I would give it a shot. It's going to be ultimately up to your banker to approve the loan, but I think worst case, I might get something in the file saying that they were relinquishing voting rights or something like that if you start to run into a hang-up.
Yeah, and this is a C corporation because I talked with her yesterday, actually. And must my co-founder be included on the application? I think you said no. If we incorporated in November of 2019 and have been paying staff on a 1099 basis to date, can we include this in the payroll calculation?
No, unfortunately, it's only tied back to what you can actually produce on a payroll tax return, or if your partnership could show as self-employment income on a K-1. So the 1099ers that you've been paying would be on their own to make their own applications, unfortunately, at this time.
Okay, great. Okay, next question. This is from Mike. First question on the forgiveness side. So I'm sure we'll have a number of questions about that. Probably deal with those on Tuesday,
right,
as we get more clarity. But nonetheless, on the forgiveness side, it seems like the essence of the new guidance from the Treasury Department is, one, you can have all your loan forgiven if A, spend it all within 8 weeks after you receive the loan, B, 75% is spent on payroll costs, and C, the other 25% is on the allowable non-payroll costs. Is that correct?
Yeah, that's correct. The originally there were a whole bunch of calculations in the original law that talked about restoring people up to historic compensation levels and FTE counts and the like. And, and they didn't specify how much can be spent where. So the Treasury subsequently issued guidance that 75% has got to be on payroll, 25% has to be on the other allowable expenses, which are effectively rent or utilities, or if you have owner-occupied real estate, the mortgage interest associated with that real estate. So I had a lot of questions around, whether or not equipment leases count as rent per se. Remember, it's ultimately going to be up to your bank to grant the forgiveness based on whatever guidance they receive at the time from the Treasury. This is one where, again, I'm normally a pretty aggressive person. I would be planning on it to land at rent associated with real property. So that means real estate. So I would, if somehow they come out and say equipment leases are going to be included, because that's technically rent too. I mean, that could be a copier, that could be a piece of machinery. That'd be great, but I wouldn't bank on that at this point when I'm running my numbers on getting to the 75%, 25%. That may change in the next couple of weeks, but right now I'm planning on it just covering real property.
So tag on to that. Originally, as part of the non-payroll costs, that included interest on debt. It was not repeated in the last guidance. So the question is, will interest on debt paid during the first 8 weeks be forgiven?
Only on mortgages.
Okay.
Meaning, like real property mortgages. Because again, the intent of the interpretation, I believe, is to cover facilities costs.
All right, great. And then
I wish they would have passed the original Senate version. That was awesome. First off, the multiple was 4, not 2.5. It also, and part of arriving at the answer, included rent and debt obligations, not just payroll. So that would have been great.
I think you addressed that stating rent for pre-existing leases are forgiven. Does this include payments on equipment leases? So
probably not. Again, it's ultimately going to be to your bank's interpretation based on whatever the guidance they've received, but I would assume at this point, no.
All right, cool. All right, number of questions. So we've got about 80 people on the line right now. Thanks for everybody that's joined us. Try to get to all these questions. So if our landlord has allowed us to delay rent payments, will we be able to pay past due rent with PPP funds? Will those past due amounts be forgiven?
Yeah, so it's funny. I received an email from one of our other partners, Blaine, that's been really helping out on the technical guidance that we're developing as a firm. And he started coming up with a loan forgiveness calculator, because we had to come up with a loan calculator. Now we're going to have to come up with a loan forgiveness calculator. And, the guidance is currently silent on cash basis accounting or accrual basis accounting. And where that gets particularly interesting, whether it's rent or it's payroll, it doesn't matter. But if you receive funds and it's in an off-cycle payroll, like if you pay on the 15th but you receive funds on the 7th, then you've got a payroll presumably that's got costs that weren't incurred during the covered 8-week period, but then you're going to have costs that are on a payroll that you're going to pay that include costs that were during a covered period. And I think rent applies the same way. So Blaine's comment was, I think that legislators should have to produce the spreadsheet that will be used to calculate the law that they're trying to implement, and perhaps things would be a lot simpler. Fully agreed. So on the rent, all I can tell you about that is what we're going to do. We got an abatement, but we're going to go ahead and pay it. So we're going to count it in. I don't think we're going to have a problem getting to the 75% payroll costs anyway, because we're a heavily labor intensive business. It's about 80% of our overall costs are associated with payroll. So it wasn't going to be an issue for us. But if I had gotten an abatement, unless I was really in some type of cash preservation mode, because I was really, really, really still unsure, and I was trying to juice up my payroll to cover a period that's uncovered, I probably would go and pay rent that had been abated. Kind of debatable if you had a loan that was abated, whether or not I go ahead and pay that for the rent, since it's likely going to be counted anyway. I probably would go ahead and pay it. I think it's also kind of a good faith gesture with your landlord too, such that if you need some assistance later for whatever reason, I'm cautiously optimistic that they will remember that you took care of them if you were to receive funds.
All right, great. Thank you. So I've got another one from Clay. Here's a two-part question for today's session. First, PPP loan application was in business and fully staffed on February 15, 2020. In late March, the municipal authorities and applicants' location passed an ordinance closing applicants' business. The loan application furloughed its hourly staff but retained all salaried employees. Applicant believes that applicant's PPP application is likely to be approved next week, but that the municipality is not likely to allow applicant to reopen until around May. Is there a possibility that the applicant could delay the PPP loan closing until early May?
It's a good question, and that's been a pretty common theme. Can you delay the clock? I think that's going to be up to your bank to make the decision on whether or not you can delay the clock. If you feel like you're in a pretty good position where you know that you're covered during this gap period, before May 1st, when we're off of shutdown, at least in or shelter in place, at least in North Carolina, I would, if the bank is okay with it, I would go ahead and delay funding, because it's ultimately going to be driven off of what date your loan document says it actually closed when it funds. So what I would consider doing is, once you get your loan documents over, or maybe prior to that, when you hear from your banker, hey, this is really going to go through, see if you can delay the receipt of funds. If you can't delay the receipt of funds and you believe that you're going to be slower to open, then what I would consider doing, we did a YouTube on this. We did a YouTube on this a couple days ago. I think it was maybe Sunday. I would go ahead and take the funds and then maybe pay ahead of payroll. Like currently there's no guidance that says that you can't give a person a raise. So I would consider going ahead and pre-funding a full payroll during the cover period to cover that back piece where you're really ramping up, but is outside of your 8-week window, if for some reason you can't delay funding. Because as long as the person isn't over the $100,000 salary cap, then on an annualized basis for that 8-week period, then you could pre-fund paying them a payroll. They're still technically employed, so you got your FTE count right. So I would think you'd be in pretty good shape if you can't delay the receipt of funds.
All right, so I think you've addressed a number of those things, but he's got one other thing here that says, if applicant has not expended all of its PPP loan proceeds by June 30th, may applicant continue to use those proceeds even though the covered period will have ended on June 30th?
Right now it reads pretty clear. It's 8 weeks from when you take the funds. So that would imply that anything that's left is going to become the 2-year note, which is really an 18-month note, since you have six months of payment deferral.
Okay, good. Next one is from Tom. In regards to the SBA debt relief program, my bank tells me I was approved for the SBA to pay my existing 7A loan principal, interest, and fees for 6 months. Question is, do I have to pay SBA back?
So I believe what happened in that program is they granted an automatic deferral for 6 months of anybody who had existing loans. And I don't know this for sure, but my assumption is that isn't a waiver to be out of debt permanently. I think all they're going to do with that is just tack it onto the backside of your note, because that was in a whole body of language where Congress also encouraged lenders to also give automatic debt abatement, even if it wasn't SBA backed. So if you look at, us as an example, we got a 3-month abatement on some of our term debt, but it's pretty explicit that is not forgiven. That's getting tacked onto the backside. So I'm 99.9%, sorry about the dogs here, I'm 99% confident that's just tacked onto the backside versus being out of it altogether on the existing 7A loans.
This is another question from Tom in regard to PPP. Are company health insurance premiums considered payroll cost?
Yes, they are. So again, it's gross wages. It is state unemployment taxes and local unemployment taxes to the extent that you have those. It's retirement payments, and it's the employer retirement payments, meaning the employer provided retirement payments. So 401k, SEP, what have you. And then it's also the employer portion of group health insurance. What it is not is employer FUTA and FICA. That was pretty clear from the last reg. So just, keep that in mind as part of your 75% calculation. We did have a lot of questions around during the week, and it may be one that comes up here, is that if you put people on furlough so that they still qualify for health benefits, and they were paying for part of the group policy, I think you ultimately have a choice you need to make in terms of, are you going to go ahead and cover that family coverage for them potentially, or are you going to ask them to pay it back, because that's effectively what they're doing when you're paying them now. So just keep that in mind too when you're going through your scenarios.
All right, the next question is from Heather. We applied for the $10,000 forgivable grant funds from EIDL. Have you heard what time frame people are seeing to receive these funds after applying, or any other details small businesses that choose that option should be aware of?
So I have not heard of a single person that has received the $10,000 grant yet, or a loan. And I had thought that the SBA had produced some guidance that they're going to start trying to make deposits 3 days after the application. So if someone has received funds, please send it in to FAQ@trustbgw.com, because I have not heard of anybody that has received funds. So with the economic injury disaster loan, if you were to happen to have gotten that prior to getting awarded the payment protection program money, you're supposed to roll that into your PPP loan, and then the bank is supposed to magically sort out that if as part of the PPP loan, or if as part of the economic injury disaster loan, 50% of the loan amount was meant to cover payroll, that's how the bank's going to sort out the forgiveness piece. The only concern that I would have with the whole concept right now of rolling in an economic injury disaster loan into a payment protection program loan is that you're going from what was supposed to be a very flexible amortization schedule based on your ability to repay, which was the EIDL loan, into a locked-in 2 years period. That's it loan. So if for some reason somebody gets an EIDL loan and rolls it into a PPP loan, what I wonder is, can you maybe only roll in the portion that has to do with covered expenses, payroll, rent, and utilities, to make the forgiveness easy, and then have a better amortization period on the other piece? It's almost a theoretical argument right now, because again, I have not heard of a single person that's had any movement on the EIDL loans.
All right, great. Next question is from David. We lease several warehouses. Will that rent be included in the definition of rent that can be forgiven?
Yeah, because that's real property.
I think David will like that answer. Joe, if you are an LLC and haven't filed 2019 business taxes and don't have a 2019 K1 yet, what do you suggest to use for owner income?
That's a good question, and we actually face the same problem ourselves. So we, ultimately it's up to us and the bank to determine the forgiveness amount and feel very comfortable with that. The IRS also just released some procedures around the ability to amend your 2019 tax return if you need to produce one really fast. Whereas if you opt, this is real geeky tax want speak, that, you know, if for some reason you didn't, you opted into the partnership audit guidance, you couldn't go back and amend a return because the partners might have changed. Well, they fixed that to where now you can amend returns. My only point in saying all that is that, you know, while the Treasury Department has been silent on the inclusion of K1 income in an LLC, where it's technically a partnership return that's getting filed, what we did on our application is we just said, look, if you just look at our 2018 K1s, it's pretty clear what our self-employment income was. And we didn't, you've seen our financial statements for this year, it didn't get any worse than that. So let's just roll with the 2018 number as the request process. And our bank was comfortable with that. So I think if that's the boat that you're in, you either have two options. You know, option one is hurry up and file a 2019 return that shows self-employment earnings, or alternatively, just work with your bank, you know, show them current financial statements, demonstrate that you did have K1s that showed self-employment earnings back in 2018, which they should already have on file, that's going to substantiate your claim. And again, our bank did not have a problem with that approach.
Yeah, and Joe went on to say maybe using income statement and records of owner distributions for 2019.
Yeah, the key is, you know, it's just going to be the self-employment earnings piece that you're just, you know, we got them comfortable with saying, look, you know, knuckleheads, you already got 2000. Again, I say knucklehead nicely. You know, I know emergency and first responders are superheroes. I think there's a lot of banks that are trying to be superheroes right now too. So yeah, we got them comfortable with just explaining, you know, look, it's right there on the K1, self-employment earnings.
So this is from Ben. He sent it via chat, and the question was, or the statement, my bank told me my businesses are too small to even look at my application. I've got some thoughts on that, but I'd like to hear your thoughts first.
That's the first time that I've heard of that. I haven't heard of anybody getting turned away other than the Wells scenario, which the update on that is that the feds did lift their lending cap. And I don't know what Wells is doing with that yet, but the Fed did lift their lending cap associated with the payroll protection program loans. So if someone told you you were too small, yeah, that really sucks. I'm sorry about that. And I wouldn't, you know, you could try another bank. The challenge is that there's not a whole lot of banks are taking people that are not their existing customers. So if you had a secondary account with somebody else, which a lot of people that were in the Wells boat did, I might try there first, or maybe there's not really you might get some with. I've not heard the too small. I mean, if you think about it, Wells actually took the opposite approach. They only in the initial pass wanted to lend to small people because the cutoff was at 50 employees and below.
So this is kind of a follow-on from Ben. He said, just tried to apply with another bank and the website wouldn't let me proceed further because I don't bank with them. So I'll just state this to everybody on the call. We've been in touch with pretty much every major bank in the area. And one bank that we know of that is working with non-customers is Pinnacle Bank. And we have no dog in the hunt. I mean, we work with a lot of these banks. But you do have to be a customer, but they have a provision for signing up and getting a checking account. So Ben, if you want to go ahead and just email me at gfrey@trustbgw, and I can connect you with the guys. Brian Red over at Pinnacle Bank has really been awesome. So, so anyway, the next question is we received information that there will be an additional $1,000 per employee available through the PPP. Do you know anything about this additional monies?
I've not heard anything. That would be news to me. So if you have a source on that one, please either cut and paste it into the chat or send it to Gary at the email address that you just gave me. But that'd be the first that I've heard of that one.
Yeah, Karen, again, my email is gfrey@trustbgw.com. if you've got a source that we'd like to hear about, because that's the first time we've heard it. From Brian, FYI, Wells opened up their inquiry last night, can do it through online banking and their CEO product. Okay, thank you very much. The next question is, did you find an answer to my question on Tuesday regarding if a not-for-profit hospice receives Medicaid reimbursements that are primarily then transferred out to a skilled nursing facility? Do they qualify for PPP?
Yeah, I didn't see anything that excluded that as a provision. So to the extent that you have payroll in the middle organization, you would be fine. The nursing component would have to be on their own for the application, but for your own payroll costs, then you would presumably be fine, assuming that you didn't have any issues with the affiliation rules, depending on the ownership structure. So I did a lot of digging, and I could not find anything that said that if your primary source of revenue was the federal government, that you cannot receive payroll protection program funds. So that I would apply. Again, it's ultimately going to be up to your bank to grant the application, but I didn't see anything that I could find that specifically prohibited it.
Okay, good. Hopefully that answered our anonymous attendee's question. Anne, can we include storage and facility fees in for our fulfillment center as rent paid for the forgiveness calculations?
Yeah, again, it's real property, so you would assume that it would be okay.
I'm an LLC S Corp that pays rent to an LLC S Corp that I am a 50% owner of. Can I include all of that rent in the forgiveness calculation?
Yeah, I would, as long as, the only thing I would be a little bit, it's not even that I would be a little bit leery of, if you had a significantly above market rental rate, and I promise we've never done that from a tax planning standpoint, but if you had a significantly above fair market rental rate, I just would be prepared that, hey, maybe there's going to be something that comes into place down the road where someone might look at that. Also, if it was significantly below market, if you took this as an opportunity to backdate your lease to pre-February 15th to have a higher rent rate, I might be a little leery of doing that as well. But there's currently no rules around affiliated parties or related parties and related party payments. So until told differently, then I would include rent payments that I paid to myself, because it's still an arm's length transaction. It doesn't matter what the underlying ownership is of the other entity.
Okay, next question. What docs are required in addition to the application form? This is for
so what we've seen is your 4 quarterly 941s, your 4 quarterly SUTA statements. You're going to need, some form of a calculator, which is either the bank's calculator or our calculator. There's some others offline. Some banks are requiring proof of the health insurance and 401ks. Others have not, presumably because it's not a major material part of the calculation. And then most everybody's asking for, either or and a wage report from your payroll company that shows somebody's annualized wages, and or alternatively your W-3 plus all of your W-2s, just so they can verify that nobody was over, that you've correctly backed out people that were over $100,000 on an annualized basis, the excess of the wage.
Okay, from Robert, can CAM be included in the rent calculation?
Well, it's part of what we pay Beacon, so you darn right it can.
Okay. Next question from Chris. How are you treating partner K1 income?
Yeah, so we covered off on that a little bit earlier, but to cover it again, if you look at this, I always forget which box number it is, so I'm sorry if I got this wrong. I think it's maybe box 14 on the K1 that shows earnings from self-employment on a partnership K1. Don't have the form in front of me, but I think that's it. that's the number that you would report as the wage piece, and then back off any excess over $100,000. And again, what we did is we used the current amounts that we're paying and just made sure that the bank felt comfortable. Look, I mean, these numbers are right in line with what we did in 2018 too, and you can see it right there on the 2018 file that you have of our tax returns that show our self-employment earnings.
All right, this is from Trevor. I may have misinterpreted what you said related to current SBA loan forgiveness over a 6-month period. Our understanding from all sources we have been in contact with is that will not be tacked on to the back half of the loan. Same with new loans for 6 months. Can you confirm?
Again, I'll look up the answer, but I was not aware that this was just a one-time get out of having to pay my debt for 6 months. So let me make sure I'm not confusing things. For the Paycheck Protection Program, which rolls under the 7A program, the loan life is 2 years. There's 6 months of payment abatement where interest accrues at 1%, but your plan would be that 100% of that loan is going to get forgiven. So the only thing you're going to be left with is an interest payment over 2 years, of which you didn't make payments on the first 6 months. So you're doing it over 18 years. In the same law, they also guided the SBA to offer 6 months of debt abatement on existing 7A loans. I am not 100% confident that that money is just forgiven in its entirety, but I will double check. But my interpretation of it was, hey, that's just, you don't need to pay us for 6 months. And they encouraged other banks to do the same. If it's forgiven, that's kind of a windfall for anybody who had an existing 7A loan. But I'll look up and find out the answer to that.
Okay, thanks for the question, Trevor. This is from Tom. Employees are currently receiving North Carolina unemployment insurance. What's the guidance for paying them payroll to cover PPP forgiveness requirements and them still receiving unemployment?
Yeah, so the unemployment is meant to cover anybody who's not fully employed, meaning not employed at all, or even employed part-time or had to take a wage reduction. And that's just a certification process on the employee's end. So if you look at the YouTube that we did on Sunday, we cover off on that topic, but generically, let's say that I've got people on unemployment now, I take funds on the 15th, and I know that I need to get to my 75%, I probably would call them back, but you're going to have to make sure that you really think through how, if I've got somebody making, less than $60,000, I'm just as good staying at home than I am coming to work. So you're really going to have to think through how you communicate all that with the employees. But generically, on the assumption that you're going to get them back to work, even if they're not fully working, you're going to pay them. They would go off unemployment, and then if you had to have them go back on unemployment again, you would have them go back on unemployment after the 8-week time period expired, because they've got the enhanced benefits through July 30th. And then if for some reason they had to be part employed beyond that, with the new law, the benefits go out through the end of pretty much the end of the year, depending on when they filed anyway. So you just would figure out a way to keep them partially whole or partially working. But right now the employment benefits apply to people that had a reduction in their wage, no matter how that happened. Either they were fully furloughed, laid off, had their hours reduced, or had their salary cut. They can still apply. So I would just use that as part of my math to get to my maximum loan forgiveness.
This is from David. He thought guidance came out yesterday that said the 401k match and health insurance do not count as payroll for $100,000 max calculation. Is that true?
That is not true from what I read in the Treasury. It was pretty specific that was salary paid directly to an employee. I mean, it's all garbled up in the same language, but that all is considered like the $100,000 is specific to the salary associated with an employee. Not all that said, I have gotten a lot of questions around 401k plans in general. You know, a lot of people make pretty good profit sharing contributions. So right now, you know, the way things read now is that even if you were beyond the traditional safe harbor, that whole profit sharing contribution would be included. You know, just think through, well, you're still gonna have to spend the money if it gets loaned to you. And secondly, there might be some guidance that comes out, I would anticipate, that puts a cap on the amount that can go into a retirement plan for this purpose. But right now there's none. I just would expect that's gonna come at some point.
Okay, this is from Ed. As a construction contractor, we often use second-tier subcontractors. Can the average 12-month payment to our subcontractors whom are paid via 1099 be calculated into our average payroll costs and applied towards the PPP loan?
Now, again, all the guidance has been pretty clear that subcontractors are on their own. So you take the employees, not them, then they got to apply on their own, and they use their employees. So, you know, hopefully there's nobody from the government listening on this call. I mean, that's throwing people for a lot of dilemmas around people that are employing people that are not necessarily in the country legally, that are still extremely hard workers. My guidance has been, you know, look, if they made it through E-Verify and you're paying them through a W-2, you might as well, and then just try to figure it out on the backside. If it was pre-E-Verify, but they've still been going through payroll, I mean, they're having taxes withheld. So I still would consider giving it a shot, especially if you kind of don't know exactly. But we have had some questions around that. But if you simply paid in cash or paid them as a 1099, meaning the subcontractor then paid their people as a 1099, there's nothing you can do at this point. That ultimate 1099er has to apply on their own.
All right, this is from Mike. I seriously doubt this would be allowed, but can any non-paid but recently furloughed personnel who are still receiving company health benefits over this 8-week period simply be rehired with resumption in pay just before the June date in order for their payroll costs based on the prior calculation period to be forgiven, or will they have needed to be paid as usual during the 8-week period to qualify for forgiveness?
Right now, the way that it reads is that if you just spend 75% on payroll, however you get there within the confines of the $100,000 limitation, then you're fine. And it doesn't matter if you hire them back 6/30, you hire them back, you know, May 31st, you know, it's up to you to try to spend the majority of this on payroll. And right now, the way it reads, it doesn't matter what you do with them July 1st. So in that scenario, as long as you spent the money to maximize the forgiveness amount, it doesn't matter how much you actually paid them during that time period, as long as in aggregate, you reach the 75% number, 75% or greater number.
Well, hopefully that helps you, Mike. Danielle, to follow up on the clarification of payroll costs, was that for forgiveness calculation only or also for the initial loan calculation? If not,
it's
specific costs.
It's both the calculation and the forgiveness calculation. So, I mean, granted, there's no guidance on the forgiveness calculation really yet, other than we've already got it out, but it's for the loan amount. So pretty much every bank has had on their loan application or their calculator pretty much exactly what I just laid out, which is gross wage less $100,000, employer provided health insurance, employer provided retirement contributions, and state unemployment taxes. Nothing else, nothing beyond that.
Great. Mark, let's see. Hold on here. What are you seeing regarding numbers of banks that are coming back with loan approvals? We've been told we are submitted Just wondering what the percentages of approvals are looking like and the timing.
I haven't heard, I haven't heard a whole lot in terms of who's been granted something and fully funded. I would anticipate that's all going to start happening, tomorrow through next week. All that said, as long as you did the calculation correctly and your bank took the application, especially with kind of the legislation that they're trying to get through now to replenish the funds by another 250 billion, I don't see a reason why you would not be approved. So it's just more of a timing of the bank actually making it happen from their end.
So here's a kind of a follow-on and clarification. So Ann had asked early on if can we include storage and facility fees in our fulfillment center as rent paid for the forgiveness. They don't own that fulfillment center.
Yeah, it doesn't matter. I mean, rent's rent as long as it's for real property. As I said, I don't, you could try going with equipment, rental payments like we talked about before. I don't know if the bank's going to allow that or not, since most of the language seems to be associated with real property rent.
Okay, great. This is from Mark. Do you think it's necessary to set up a separate bank account for the distribution of PPP funds? My thinking is an Excel spreadsheet that itemizes how the funds were spent to complete with supporting documentation instead of a separate account. Your thoughts?
I don't think it's necessary really to set up a separate account. If you wanted to go a little bit more in the weeds in terms of the calculation itself, so that it's easy to print, you could set up a separate bank account in your accounting file, even if it's the same bank account, and just link any payments that you make back to that register. So, you could have main checking and then main checking PPP. It's the same account, but if I'm paying my rent, I hit it to the PPP account. If I'm paying, my software vendor, I'm just using my main checking account. So when the bank says, show me your calculation to get to loan forgiveness, it's as easy as printing that specific check register. But if you think about it, the banks are going to be on the hook for verifying the forgiveness amounts. I mean, I really would plan on the fact that at some level you're going to have to show clear transactions, the underlying invoice and the underlying payroll filings from your payroll provider for the cover period. And as said, I think what's going to be messy is what do you do with accruals? So we'll get some more guidance on that out hopefully in the next week or so. But at a minimum, definitely do the spreadsheet now. But I would consider setting up just a separate account on my own accounting file, not necessarily a separate checking account.
The next question is, just like your suggestion of paying payroll ahead, could a business prepay rent as a forgivable expense?
Nothing says that you can't do it now as long as you're within that 75-25 mix.
Okay, this is from Ken. As of 6:30, we will be back at full staff. What rules apply on maintaining the headcount if business doesn't return to pre-COVID-19 volume if we receive PPP funding?
Currently, it's completely silent on what you do on July 1st. So as long as you're back to your FTE count by 6:30, and it's 1 minute before 6:30, right now it says that's okay. So there's nothing around what happens after June 30th.
All right, so this is from Danielle. Can you post a link to your calculator? I think we've got a link on our COVID-19 response, don't we?
I think so.
Look at that. Look at the trustbgw.com website, Danielle, and look for that calculator. I'm pretty sure we have one up there. And if not, if you can't find it, just email me at gfry@trustbgw.com. Also, Danielle said, hey, I've seen recommendations to use the trailing 12 months and 2019. What's your recommendation?
So the guidance basically says pick whatever period you want, and it's either just 2019 or it's a trailing 12 months. To me, that question has really three or four different factors in it. Factor number one is what's going to get me the most funding, because it really is meant to be indicative of what your payroll is going to look like in the future, not necessarily what it was historically. So from that standpoint, you'd want to pick whatever period is larger. However, your banks are set up to verify 2019, not going to sugarcoat it. Like they're not set up to really understand at this point January and February. Maybe they set up to understand January, February, and March because you can produce a 941 associated with it. But right now, what you have are a lot of banks looking at incorrectly line 2 of the 941. If they're doing it correctly, they're looking at line 5C of the 941, and they're using that to verify your payroll number as a gross number. So I think the challenge is if you're going to use a trailing 12 months, then you're just going to have to figure out how you're going to prove that gap period, unless you've already got your 941 for the first quarter. But the second part to that is the FTE count. So we do have a lot of clients that anticipate a diminished headcount, because they're going to have a diminished headcount anyway. They either trim some fat or business model changed or whatever. In the law, it says that you can use as your test period either February 15th, 2019 through June 30th, 2019, when you're comparing FTEs to FTE counts as of 6/30/2020, or at your option, January through February 2020. So at this point, I haven't seen the banks really verifying the FTE counts very much. If you think your FTE count is going to be low, I would go ahead and make the bet and put down January through February 2020 as my average FTE count if that was going to produce a lower FTE count. So maximum salary dollars, lower FTE count is really what we're going for here, just to make sure you got all your bases covered.
Okay, a few questions here from Marion. So what is the 75-25 that's been mentioned a lot? I have a feeling it's the 75% of towards payroll, correct?
Yep.
So 75% of that loan amount is going towards payroll, 25% of other non-payroll expenses that are
Yes. Which specifically are rent, utilities, and if you don't have rent, or if you have rent, but you also have mortgage interest, that's what's allowed under the 25%.
Next question is, I've heard that up to 25% of the loan can be put into an IRA. Is that true?
I haven't heard up to 25% of the loan can be put into an IRA, but what could conceivably happen, this goes back to the retirement contribution limits, is that if your retirement plan had a profit sharing match component and 25% is a statutory limit off wages, then in theory, 25% of it could go into a retirement account. Remember, that's going to be capped at $100,000 of gross wages. So, you'd have to do some math on, all right, well, part of my wage gets excluded to maximize the IRA contribution, but then I get the full value of the IRA contribution as part of payroll costs, and all those things together still get 75%. All that said, that I don't think hits the spirit of the law. So I would suspect that at some point they're going to issue some guidance around what's the max retirement contribution, probably by percentage, that can be made, because I don't think I'm going to want to be the guy that, unless I have a pattern of always doing 25% no matter what, I just wouldn't want to be that first guy that had to go up and have the, Adam receives, forgiven funds and enriches his own retirement account. So I wouldn't spend a lot of mental energy on trying to figure out how to make that work, because I suspect there's guidance that's going to be coming out about that. Now, that said, if it's looking like you're getting pretty close to your 8-week window and you still need to deploy some funds and they have not issued guidance yet, hey, I'm all for it. Let's pursue that as a strategy.
Next question, how should all the docs be delivered to the bank? Via in-person, mail, web, etc.?
Yeah, sorry, ask the question again. You cut out there a little bit. And I ordered the Wi-Fi mesh. It's supposed to be here on the 11th.
All right. That's awesome. How should all the docs be delivered to the bank, as in person, mail, web? It seems like we're seeing a lot via web, but
It's everything that I've seen thus far has been either web or the bank's internal secure email system.
okay, this is from Stephen. I tuned into the Tuesday webinar late, came in on part of the discussion that seemed to be saying that priority for government money will be given to PPP applications and that EIDL will take a back seat. Do I understand that correctly?
No, that what I think I was referencing, we talked about it a little bit more in this call, is that I have not heard of anybody who has received EIDL funding yet. So when I was specifying priority, it was more around your fastest way to get money right now is going to be the Paycheck Protection Program. So I would prioritize getting that application in. Nothing stops you from doing an EIDL application as well. It's just still have not heard to this day of anybody who's received the $10,000 grant or even heard back from the SBA in terms of the loan amount. So that was just more around your time. I'd be putting on my ponies, putting all my markers out on the Paycheck Protection Program. And then if I need to use the EIDL later, or in addition to, I'd start focusing on that after I'd focused on making sure I had the Paycheck Protection Program locked in.
Okay, this is from Robert. Why are we not including workers' comp insurance as a state tax?
Didn't write the law, dude, and haven't seen a bank calculator included on it. And I can appreciate it. It's a pretty significant expense that's mandated. But I think that the government would view that as an implicit tax, not an explicit tax. And the way the law reads is they're only looking at explicit taxes. So if you can convince your bank to use it, go for it. But I have not seen it on a bank calculator anywhere, and we didn't include it in our. I get the theory behind it, but we didn't include it in our calculator either. I mean, the other one that kills me too is how come federal unemployment tax? Like, why state tax but not federal tax? Now, I understand that the federal unemployment tax is not that significant, but at the same time, the employer component of FICA sure the heck is.
Oh, this is an interesting question. Do you think, due to the Freedom of Information Act, that names of companies receiving PPP loans and amounts of loans will be published at some point? Also, are there any industries that are precluded from receiving PPP?
So in terms of FOIA, it's a good question that I don't really know the answer to, but that's part of why I've issued the advice that I have, is that assume at some point this will become public knowledge, and I don't want to be the first test case of doing something that was on the. And again, everybody knows that I'm a pretty dark gray guy, but this is one where I would be a lot more in the white or light gray on. So I'd assume it probably could become public at some point, and even if it's not necessarily public, I don't want my suppliers in terms of payment. So this would be, I would go, if you do receive funds, I would go ahead and say, all right, let's honor the intent and try to keep the economy moving to the best of our ability while maintaining our cash flow versus just try to hoard cash. Oh, there was a second. What was the second part of the question, Gary?
Let me pull it back up here because I've hit it as answered. Let's see. Do you think there are any industries that are precluded from receiving PPP?
Yeah. So the only ones that were excluded outside of the affiliation rules is if it's illegal. So, it's not legal in North Carolina, but I guess that leaves all the pot farms and dispensaries high and dry. Then again, they're probably doing quite well right now.
Next question, Tom. What about my commission service employees? They're fully employed W-2 employees. Is there special are there special PPP guidelines for them in terms of calculating payroll costs?
So that falls that's got a theoretical question and then the actual letter of the law. So commission employees obviously counts as part of your calculation for gross wages, as do tipped employees, because same concept. And on the assumption that they're reported, then it's going to show up in your Medicare wage number on your 941. So what I would say is that I would just come up with a number that you think you feel comfortable with. Now, some clients we have commission salespeople making, $200,000, $300,000, $400,000 a year as all variable compensation. Now, in this case, especially if they're not, this gets back into the theoretical argument, especially if they're not selling anything, then you're really paying them for commissions that they're not earning. So I think what you're going to have to figure out as a business owner is what's a reasonable draw in lieu of commission, and there's not really a good reason to have it go above $83.33 a month, which is the maximum forgiveness amount. And then you'll need to figure out what you want to do about that on the backside in terms of, hey, are future commissions going to apply against that, or is that just, hey, my one-time deal for you, and I changed the commission structure going forward? I don't know, but the guidance really is you can pay them anything that you want because we understand that they're not earning commissions or tips now. However, just it would be silly, I think, to go beyond the $100,000 annualized, and then you'll just need to figure out from a business perspective what you're going to do with it on the other side.
Awesome. Any other questions? We've taken up 57 minutes of your day. Oh, we got two more. From Marion, 941s and payroll company reports will indicate that a monthly payroll has been much lower than salary. Is there any way to ask for the loan amount based on salary rather than 941s, et cetera?
I don't really understand that question. So if you look at 941s and payroll reports, payroll reports typically should show gross wages as a starting point. And the only discrepancy between Medicare wages, and it's a known discrepancy, so you'd add it in. But again, you're going to have to walk your bank through the calculation every time on this if you're going to do something different. The only discrepancy between what you really paid somebody that appeared on their W-2 and what their gross salary was. So if you're still on there and you want to provide some clarity around this, maybe I'm getting the question wrong, but it's the Medicare wage line. So if you think about the 941, I think it's line 2, which all the banks receive guidance to use, that is incorrect. That line is lower because that's what's used to arrive at federal income tax, and that does not include employee deferrals into retirement plans. However, Medicare wages, which is line 5C, does include it. The only thing that Medicare wages does not include is employee FSA and HSA contributions. So I would just add those back into the group health insurance calculation to get back to the same answer.
Okay, one more question here from Mike related to the above. What if I have a salesperson that had an $80K salary and $60K in commissions in 2019?
Well, 100 is going to count for the purpose of your calculation for your average payroll. And in that case, I probably would end up paying them either 80 or 100 during this time period just to make sure that I'm using the full 75%.
All right, cool. Well, we have finished 1 hour and we have just cleaned out all of those questions. Those were some really good ones. Yeah, good job, Adam. And
no
thanks, everyone. Yeah, we had 95 people on this call today. So we will plan on doing this again on Tuesday. And we'll probably have more information and thoughts, at least at that point, on some of the forgiveness questions that are swirling and starting to swirl out there. Any other
Yeah, I
thoughts,
think,
Adam?
yeah. The only other thing that I'd add, I mean, it just came out, but the Fed is going to back, I want to say $500 million in loans and started releasing some terms around those. You know, those are loans, not forgivable things, but loans that banks can make that are going to be backed by the Fed, so it doesn't have to go through Congress. 4-year amortization, 5% interest. I don't think there was a lending limit, but the limit on the business size was up to 10,000 employees and up to 25 billion in revenue. But there wasn't a low size restriction either. So, you know, I think that to me is what's going to really be the replacement for the economic injury disaster loan, that we're not getting anything, you know, coming out of that, because that implies the SBA and the government is distributing loans when not through a bank. So, you know, stay tuned for more on that, because I think that's going to be a second source that's going to come out here shortly, potentially through your own lending institution that will be meant to augment the Paycheck Protection Program and definitely help out people that didn't qualify in the first place because they were north of 500 employees.
All right. Well, thank you everybody for taking time out of your day to join us. Let your friends and neighbors that are also running businesses and trying to make heads or tails out of this, that they can go to the BGW CPA YouTube website. We'll have this thing hung up there yet today. And they can always go to our resource center at trustbgw.com. And if you have any additional questions, hit FAQ at trustbgw. So thank you again for everybody attending. Stay safe out there and healthy, and we look forward to talking to you soon. Take care.
Yeah. Thanks, Gary.
You bet.